Hello traders, you are welcome to another video on my channel. So in this video, I'm going to be showing you how you can select the right order blocks and the right POIs, right? How you can select them and how you can increase your chances of your POIs working out in the Forex market. So in this video, we'll be using a live chart, right, of Great Britain Pound CHF. It will be a backtesting video. So first of all, we need to have a diagram on how our structures are supposed to look like, right? So we start by drawing out where we think are ideal zones for good order blocks, good POIs, and yeah. So let's say the market is pushing up and the market creates some sort of an order block, right? Create some sort of an order block like this, then pushes down. Now, once the market pushes down like this, what we normally need to have is this zone here. It's our liquidity. This will be our structural liquidity. This zone here will be our structural liquidity. You should make sure that the zone has not mitigated this order block, right? Because for this, the whole of this zone is an order block. And if let's say you're in a smaller time frame, this might act as an order flow. So it's good to use is zones. The POI zones that are good for you are the ones that have not been mitigated. The other flow, the other block has not been mitigated. So let's say we have this here. This will be our structural liquidity. So now where will we be looking to enter? The whole of this zone, it's our zone of entry. But you can refine it down to the other block. Then when price comes back to this zone, when price pushes back to that zone, then you can be looking to something of this sort, right? You can be looking to wait for a change of characters like this and you buy. Once you buy, you are targeting this zone up here because the market is in an uptrend. So generally, other blocks that have these characteristics, that they have liquidity protecting the other block, they normally have high probabilities of working out. All other POIs, right? Not just other blocks, POI demand zones that have liquidity protecting them, they have high probabilities of working out. So this is one of the reasons why you should use this criteria if you want to choose a good order block that you think it will work out. So here, if let's say you are going in for a position here, this is how your position is going to look like. That's how your position should be looking like. Your stop loss below this main order block. If you are somebody that you're a conservative trader, right, you can then use this zone here. There are two types of ways that you can put your stop loss here, right? Some will put their stop loss here just below this low after giving a change of characters and see target this high. There are times whereby the market might come and sweep this low before continuing up. So normally I prefer you put your stop loss here. So long as you have your risk management and you have calculated your risks properly, that is where you should put your stop loss. So on the bearish example, on our bearish example, we have a similar scenario here, which is this: the market is pushing down, it creates a zone, right? And when the market push further down, it pushes up, giving us our structural liquidity. Once our structural liquidity is created, the market takes out the structural liquidity and it drops. So this level here, it's the level of our structural liquidity. Sorry. This is the level of our structural liquidity here. Then we have our level of interest, our point of interest, which is this zone here. So you make sure that you have liquidity before your POI or before your point of interest. So now this will not help you right in a real chart scenario. So let's go into the chart and I show you how you can locate this in a real chart. right? Let's see how you can locate this in a real chart. Okay, if we are looking at this example here, what we normally have is, you can see this is our break of structure here, right? Now this break of structure is just it did not really close above, so we are going to use this one that closed above here. Now after this break of structure here, we do have this break of structure. It took out structural liquidity, right? This is structural liquidity, or many people can call it an inducement. I myself, I normally call it an inducement. See that it swept below, that's why we are calling it a break of structure. Now when this break of structure occurred here, what was our first thought? We need to wait for, we need to look for a point of interest, right? So I said before, your point of interest, make sure that there's structural liquidity or there is an inducement before it, or you will be the inducement. So now looking at this, you can see up here we have this zone, which is our structural liquidity zone. That is our structural liquidity. Can see, right? This low act as our structural liquidity in this case, and after that low is taken out, we can then look for a point of interest from here, right? Now let's play and see how this worked out. So for me, I'll have a position, some sort of a position like this. This is how my position will look like. Let's increase our stop loss, right? This is how my position will look like in this case. Then for this, right, for you to actually enter, you need to enter in a smaller time frame. You need to enter in a smaller time frame after a change of characters. So let's play price and see how price played out here. Okay, you can see that we got stopped out in this case before price actually hit our point of our TP. Sometimes this actually happens, right? This actually happens. The reason for this is, see that price targeted external liquidity here. This was our external liquidity. So the market swept it. The market swept this low here before continuing to give us a break of structure. So now, right, if you play price forward, you see that after giving us this break of structure here, after giving us this break of structure here now, we do have a break of structure here. Now, in this case here, right, we have the market that has taken out liquidity already. This movement here, this movement to the downside at this zone has already swept this previous low. So it has taken out liquidity. So we can buy from this other block without necessary needing to wait for our uh for structural liquidity, because this previous move has already swept our liquidity. So this is more like a re-entry. But there is also liquidity in this case, right? If you look here, you see that we have this pullback. So this is our structural liquidity in this case. So if we wait for price to push below, to push down to this zone, okay, we have price now on our zone. We have price on this zone now, right? So from this zone, you can get your entry using the other block, right? This is an other block. You can see that this other block has swept this previous low. So it's a high probability other block in this case. So once price sweeps this entry, once price comes back to our entry, we can then go in for a position and we put our target just somewhere around this high, right? You see that price has already mitigated this, and it's running in a profit. So if you play price out, let's see how price behaves. And just like that, our TP has been hit, right? Our TP has been hit here. So We have, if you are using this other block, we have one loss and one TP. Now let's continue and see what then happens now, because the market has not given us a clear break of structure to the upside. So let's see what the market does. Okay, now this is interesting. What we have here is we have a change of characters. This is a change of characters, right? This is our valid change of characters here. That is a change of characters. And the reason why we have this change of characters is because this zone here, right? This was our protected low here. This was our protected low here. The market has now broken below this our protected low. So now we have a change of characters. So after this change of characters, what do we look for again? We look for structural liquidity, right? We make sure that the price takes out structural liquidity or an inducement. So currently where the market is, this is our last pullback. This first, this last pullback, right? As the market is moving down, this is our last pullback. So we mark it out. That is where our structural liquidity is at. So, so if you play price forward, what we need to wait for is for the market to take out this structural liquidity first before we start looking for any point of interest. The market can create another structural liquidity here. So you can, this structural liquidity can actually be moved. So you see here that the market has actually taken out this structural liquidity. So where are we looking to buy here, right? Where are we looking to sell from? First of all, our point of interest in this case will be this zone, the whole of this zone, right? This is an order flow. This is what is referred to as an order flow. If you look at this zone on a bigger time frame, you see that this zone consists of just one candle on a bigger time frame. But now we are on a smaller time frame, and this zone consists of three candles. So this zone has a high probability order block. Why? This order block here, you can see it swept liquidity of this high as well. It swept liquidity of this previous high here. So if you map it out, you see that this other block took out liquidity here. So what we normally need to wait for is for the market to tap into this zone and gives us a confirmation so that we can sell. Now, another thing is this other block, right? This is our extreme order block here. This is a protected high. So the market should not go below above this zone if the market is supposed to continue being bearish. So let's play out price. Okay. If you play out price, right? If you play out price here, wait for it to mitigate that zone. Don't be in a haste. Okay, let me increase this. Okay, now we have price has mitigated our zone here. And while price was mitigating this zone, it also swept it also swept the liquidity of these previous zones here, right? Swept the liquidity of these previous zones. So there are two types of entries you can get from this. There are two types of entries you can get from here, right? The first entry is you directly you sell from this zone. You put your stop loss above here. You sell from this zone, and this is where your TP should be at. So this is a 1, 2, 3, 8, or you can wait for a change of characters, right? This is where our change of characters occurred here. Now, in this case, after this change of characters, you don't need for structural liquidity to sell because this previous candle here swept this there was this is a sweep here, right? This wick here swept this previous high. So you can directly place your sell on this zone so long as this candle closes below, which this red candle did. Once this other candle forms and trades into the high of this candle, right, to the low of this candle and touches our other block, we are good to sell. So this is how this other entry here can look like. Then we have the same, sorry, we have the same stop loss, the same tip target as our other trade, right? So if you play price on and see, okay, now you can see that our target has been hit. Our target here has been hit. So you can see that this other block, both this other block here and both that other block up there worked perfectly. Of course, you can use this on a smaller time frame, right? You can use your entries on a smaller time frame, but due to my plan, my trading view plan, I'm not allowed to switch between many smaller time frames, right? I don't know. I cannot go below the 1 hour. So now, right, after this, if you are looking for another block, you start from, if you start from up here, you see that if you look here, you see that we have two other blocks, right? We have another block here, which already swept liquidity, and we have this other block here. So which one will you normally choose? Many people will choose this one, but the problem with that other block is it has no imbalance before it, right? The other block should have an imbalance before it. We all know that is one of the main reasons why we use other blocks. So if you look here, you see that this other block has no imbalance before it. So now our next other block that we'll be looking to trade from should be this other block. So what you need to wait for is for the market to break structure. First of all, your other block should cause a break of structure, right? Once the market breaks structure and gives us our structural liquidity or our inducement, then we can now start looking for an entry of our other block. Now, if you play this out, you can already see here, right? You can already see here that the market has given us structural liquidity here. So if most of you have not watched the video on pullbacks, if you look very well, you see that we have a pullback here. Now, let me just quickly explain for those of you that have not watched the video on my channel on pullbacks. You can go and watch. And if you are still watching to this point, please make sure that you hit that subscribe button. Share this video to other traders so that they can benefit from this. So looking at this, right, we see this black candle here. We see this black candle here. It's the lowest candle in this range. This black candle, the high of the black candle got taken out, and the low of this black candle also got taken out. So this is a valid inducement. That's a valid pullback. You see, right? This is a valid pullback. So we are looking to sell off this zone. We already have our structural liquidity here. So we are looking to sell off this zone. So if you play price forward, wait for price to get to that zone, right? Sorry, let's see what happened. Okay. 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 So price has gotten to this our zone here, and you can see from here price is already reacting down. So on a smaller time frame, once you get your change of characters, you are ready to go, right? This is how your zone should look like. That's how your trade should look like, right? As simple as that. So you should make sure that this zone, right, your other block should be the unmitigated. The other block should be a valid POI, right? It should be from a valid pullback. If this pullback is invalid, then your other block is as good as invalid. So now, if you look from here, if let's say we have only one unmitigated candle in this range, like this candle is mitigated, this one is mitigated, you move to this one is also mitigated, then you move to Okay, let's say this candle is mitigated, this one is mitigated, this one is mitigated. You move to the one that has an imbalance before it. If there is no valid pullback, you can from that pullback you can start moving down to until you see the unmitigated candle. That will be your other block. So here, this other block has been mitigated. Let's play price out and see how price played out here. Okay, we have another TP. So you can see that since we started trading this, we have one, two, three, four trades, right? We took a trade here which we lost. So we have four trades. We have won three of the trades and we have lost one. We have lost one. So that is about 80% win rate at the moment, but that is not good enough to determine the strategy right yet, right? That's not good enough. So from here, we also have a break of structure at this point. You have a break of structure. This candle has already closed below our price. So if you play price forward here, you can see that price continue to drop massively. So now we are waiting for the market to push up. Our other block in this case will be this zone here. This will be our other block here, right? But do we have structural liquidity before this other block? That is a problem now. You should make sure you have structural liquidity. If you look here, maybe on the smaller time frame, we might be having structural liquidity before this other block. But on this time frame, I don't see any sort of structural liquidity unless the market creates another pullback here. So let's play price out and see how it plays out. Okay, the market has gotten to our other block here without any structural liquidity. I don't see any sort of structural liquidity. Maybe on a smaller time frame, this will be a structural liquidity. So I'll be looking to sell here, but I'll be very skeptical here because this other block might act as our liquidity in this case. So let's continue and see how the market behaves. Okay, the market is selling. The market is selling. Let's see here. Okay, since there was no structural liquidity in this case, I don't think the market will really push that down and to take out this low. It might take out this high first because even though this was a valid break of structure here, the market left liquidity above this high, right? So the market should push for that high first and give us some sort of change of character. That's what I'm anticipating. Some sort of something react maybe from this zone, then buys up. So for those that might have entered off here, if you are wise enough, you should have taken partials and set your break even already, right? Because if you entered off this zone, this is how your trade should look like. This is how your trade should look like. So you should have gotten at least 70% of the movement. So what you should do is at least somewhere around 50%, you set your break even and you take partials. You don't the market is not your friend. The market is not your friend and you don't control the market. So you should always make sure that you secure some profits in the market. So as you can see from here, you can see that this market it keeps playing around. Let, let's fast forward here. So at this moment, you can clearly see that the market is in a range, right? Market is ranging between this high. It's ranging between this high and this low. So the first reason here might be because of non-structural liquidity here. The market lacks the liquidity to continue below and break below this low. So if you play prices, if you continue to play our price, let's see what the market goes for, whether it goes for this high first or it goes for this low. But at this point, since there was no liquidity here, the market might likely just go up. Okay. We see that the market has now taken out this high. So this market now is now bullish. So anything you want to do here, you'll be looking for buys. You'll no longer be looking for sells again. So guys, that I think that will be all for the video for today. If you learned something from this analysis, please subscribe to my channel. Please follow me, subscribe, leave a comment on what you think about the video and what you think I should do next, right? I should cover next for you so that you can understand very well. And also I'll bring in more videos like this with these tools I now have. So stay blessed. God bless you. Happy New Year in advance. Study and prepare for the new year. So also to end, I will be taking one student for this year. So if you are interested, you can join me. The fee is not high. You can join me. I take just one student at a time since I won't need my students to be high quality students. Not I don't need majority. I don't need majority and the money. I need just one student at a time. So you can always contact me or you leave a comment. I will reply to all my comments, right? If you are interested, let me know. Have a nice day.